has expired. I now recognize the gentleman from Pennsylvania, Mr. Meuser, for 5 minutes.
Thank you, Madam Chairwoman, very much. I thank all of our witnesses certainly as well. Proxy voting process is not working to serve the best interests of investors. I think that that's kind of clear when you have 97% of the proxy voting withheld within 2 organizations, which would be alarming to, I think, general investors who probably aren't aware of that and don't engage in proxy voting. As well, the idea that you happen to agree with a particular ideology from these proxy companies, and that's why you're favorable to them, can really head you down a road that, well, could reverse its course sometime in the future, particularly when laws, regulations, standard practices, laws that have been in effect since 1940, like the Investment Advisors Act of 1940, where there's fiduciary responsibilities, where there's ERISA, where it's very clear for pension funds and whatnot that you're to act in the interests of the investor, not an ideology. And if there is a conflict of interest, it should be disclosed. Little things like that have been followed for decades now. But instead, we have an SEC that has decided to put out a 500-page report that says how, well, we're going to do things a lot differently now, and because we believe in a certain ideology, we're going to force, not recommend, not suggest, not even give tax incentive towards, we're going to force investment companies. And of course, we've seen pushback. I mean, Warren Buffett has called it asinine. I think that's a technical term. Large investment firms, I'll leave their names out, have stated that they're being asked, mandated, required, told to renege on their fiduciary responsibilities. So what are we talking about here, okay? If we want to see these sort of changes, they need to go through an actual legislative body on the federal government we call Congress, right? Not the whims of a few individuals who are temporarily going to be running a particular agency such as the SEC. So anyway, Dr. White, how does the politicization of business management and capital allocation influenced by proxy advisors, let's go back to proxy advisors, impact market confidence and investor trust? Do you think that this breeds trust, this sort of mannerism of voting?
Yeah, thanks for the question. So when you think of the word trust, you trust who you're investing your money with, your retirement income, that they're going to vote in your best interest as a shareholder. They have a fiduciary duty to do so. The reality is that asset managers can simply rely on the voting advice of proxy advisors whose interest might not be maximizing shareholder value. If I was rational, I would probably sort on only the votes that they recommend voting against for the board and only the proposals on the E&S side of governance that they recommend voting for. And that leaves out informed voting, and it's why we see asset managers who conduct their own research tend to outperform. So relying on proxy advice can erode that trust that your investment advisor is acting in your interest.
Thank you. Mr. Netram, don't you believe, and isn't it true that the information that is now being required by Chair Gensler's ESG disclosure proposals is material? If it's material to a public company's operations, wouldn't it already be obligated to be disclosed?
That's absolutely true. That is the core duty of a corporation here, to disclose material risk to their investors so that they can make informed investing decisions. That duty currently exists with or without this proposed rule.
Right. So, Mr. Netram, as well, you mentioned Representative Stile earlier and his bill. I don't know if you alluded to the bill. Would you comment on the importance of this legislation?
Absolutely. So Congressman Stiles' bill would make sure that proxy firm recommendations proxy firms are actually subject to some level of oversight. Right now, we're in a system where these are the only actors in the financial system that have minimal to no oversight at all. Everybody else, companies, exchanges, asset managers, are subject to fairly significant oversight. Proxy firms so far have been able to escape that, and the Stile bill would bring them into the net.
Excellent. Thank you. Madam Chair, I yield back.